Welcome back to the show. The fallout from the UK's Brexit vote has just begun. Already, it's prompted ratings agencies Standard & Poor's and Fitch on Monday to strip the UK of its top shelf credit rating. Meanwhile, there's been a lot of talk about increased odds for a UK recession. Goldman Sachs even now predicting a mild one in 2017. So are the risks overhyped, or should investors in fact be positioned for a recession? That's the question that I tossed to our next guest, Chris Versace, Chief Investment Officer at Tematica Research and co-author of Cocktail Investing. Take a look at what he had to say.
First and foremost, there's no doubt that there's a lot of shock and awe that's going on, a lot of uncertainty, and there's a lot of people who are looking to, for their own reasons, take advantage of that with these very scaremongering tactics. But let's dial it back a little bit and look at the data. And when we do that, and we look at the PMI data that's been coming out, particularly for the UK, we start to look at what we call the vector and the velocity, so the direction and the speed of the UK economy. It's been doing this since January. And then if we look at April, it was actually in contraction mode, and it bounced back in May. So to me, it says that they're kind of on wobbly ground, at least in the near term. Then we think about the Brexit and the uncertainty and what that might mean. We're hearing about technology hubs moving out of London. We're hearing about banks potentially moving headquarters and branches outside of Britain.
Yeah.
And then, just the uncertainty on what will happen with trade, what will happen with employees and moving them around. A lot of hesitancy, I think, is going to come out. And to me, that says that, there will be restrained spending in the short term. So we might see it slip into a recession, but I think that will be relatively short.
Do you think the UK risks losing its place as the financial center of Europe? Because we've heard a lot of talk about that before this vote took place. A lot of other major European cities saying, well, we would, love to pounce on the opportunity of being the financial headquarters of Europe. Do you think that's at all at risk? I heard you just say that major banks are thinking about leaving, et cetera.
It's kind of interesting because when you think back a little bit, about 10 days, 2 weeks ago, when it's appeared originally that the Brexit was going to leave and people were freaking out, the big argument that was being put forth is, well, Britain could leave and be a tiny little country on its own, or it could stay and really help influence the EU. And then we saw the votes swing back, and then, again, shock and awe, we saw what happened. But I think when you, again, step back and look at the data, you kind of understand that, Britain really funds, 15% of the EU? So they're paying 13 billion pounds, I think, a year, and they get 4.5 billion to themselves. So when you sit back and you look at that, there's a very good chance that Britain will be, very strong on its own once we get through this period of uncertainty.